Thank you for joining us today. My name is Mike Mills, and I'm the managing partner here at the Legacy Advisor Group. Today is Tuesday, July 29th, before market open. Every month I record and send out a video inside of our newsletter. Each month there are any number of things we can talk about from the market and economy. We all read a good deal related to the macroeconomics and market environment, as well as talk and meet with strategists with many different views. Selecting what to talk about in these videos comes down to what is relevant. For instance, we just sent out a video recorded by one of my partners, Ken Jones, related to the passage of the recent tax bill. This month, there are a few things I'd like to comment on. I'll touch on the market, interest rates, and the Fed, and wrap up with thoughts on the housing market. We're just over 1/3 through the second quarter earnings season, and as of last week, of the companies that have reported earnings, about 80% of companies have beat earnings, which is above historical levels of 77%. That itself was a bit of a surprise, with much of the talk about how tariffs would negatively impact companies. We're not ruling this out, but it is yet to be seen at high levels. The beat in earnings is not really driving markets higher, but really just supporting current market levels. So far, earnings growth is falling in around 6.4% according to FactSet, which is the lowest since Q1 2024 at 5.8%. Over a third of the S&P 500 is technology, and if you include technology adjacent companies, it's more like half the index. This last point is interesting, as we've thought for many years technology will become a staple for companies operating today and needing to embrace the use of technology. The more recent operative word is AI, which you no doubt have heard over the last year. AI is becoming more and more central to technology-related companies and the central point of discussion for traditional tech companies and non-traditional tech companies. I've included a chart here from JP Morgan that I think is fascinating, as it shows AI adoption by major sectors to produce goods and services. On the other side of the chart, you see the barriers to AI adoption, and the top one is lack of knowledge of the capabilities of AI. Further down, you see the lack of skilled workforce. There are many fascinating discussions around AI-focused companies and the retraining of workers to program and work with AI. Even more interesting is that much of the retraining focus is working with non-college degree holding workers, many of which have lost labor jobs in the past. Adding to this, there's a very interesting discussion going on in our country about the need for or not for a college degree. After many years of focusing on sending our children to four-year schools, I expect this discussion's not over. As I mentioned earlier, never a lack of information out there. Let's pivot to interest rates. There's been no shortage of news regarding interest rates, the Fed's independence, and President Trump's opinion in the matter. If you recall, the Fed kept rates too low for too long after COVID and stated often that inflation would be transitory. We feel the Fed is now keeping rates higher than needed. We're not alone in this camp, as many economists and strategists believe rates should come down. Now, we don't believe they need to be as low as 1% or more, as some have suggested, but 3 to 3.5% would be a healthy range for savers and buyers. Tomorrow, the Fed will announce their rate decision. We would be pleasantly surprised by a decision to decrease rates, but not shocked if they do nothing. Rate moves or not, we believe fixed income investments, taxable and tax-free, remain attractive investments with attractive yields depending on your tax situation. As a percentage of treasuries, long-dated municipal bonds, tax-frees, are trading at 93+%, historically attractive given their tax-exempt status. We like to see 80% or above for municipals to be an attractive option, so you can see we like this area very much. Finally, a few noteworthy updates on housing. Sales of new single-family homes sank 13.7% in May from the prior month, and single-family housing starts dropped 4.6% in June, with permits down as well. Mark Zandi recently commented that home prices had also held up well, but are now going sideways and set to turn lower as near 7% mortgage rates crush demand. In fact, the latest housing market index survey from the National Association of Home Builders showed 38% of builders cut prices in July. That's up from 37% in June, 34% in May, and 29% in April. Our friends at First Trust just reported that median sales prices are down 12.7% from the peak in October 2022 and have fallen 2.9% in the past year. Our opinion here is that although we still have a great shortage of housing in our country, rates have been prohibitive for home buyers, especially first-time home buyers. We believe this will continue until rates come down. Current homeowners with mortgages are pausing making moves due to being in a current low with low rates versus moving and taking on higher rates. Our friends at First Trust recently published this chart showing a breakdown of mortgages and at what rate they're financed. As you can see, nearly 70% of mortgages are under 5%. What you don't see is that over 90% of mortgages as of Q1 2025 are at a fixed rate. Ironically, this has led to higher supply in the market. First Trust reports the supply of completed single-family homes is up 280%, the highest level since 2009. This brings into question the age-old American dream of owning a home. That dream may escape many for the short term. That dream may no longer be a primary focus for younger generations. Too soon to declare for sure, but something that is very interesting to observe. Well, that's it for this month. As you know, markets and microeconomics can change quickly in the short term. Remaining diversified, having a plan, and staying long-term focused are key components in reaching you and your family's financial goals. If you or someone you know could benefit from discussing planning for retirement, planning for transitions in life, or just general questions, please don't hesitate to pass along our information. And on behalf of the Legacy Advisor Group, thank you for your trust and your friendship. Have a wonderful day.